Hello and welcome. In this video, we will learn a few terms used in the world of trading. Okay? Now, if a person wants to trade in the stock market, then he needs to have these three accounts. Okay? A bank account, a Demat account, and a trading account. So the person may be a buyer or a seller. No matter what he is, he needs to have these three accounts. So what is the use of these? Bank account reflects the money. It tells you how much money do you own or does the person own. A Demat account reflects the details of the stocks that a person owns. For example, how many stocks does he own? Of what company does the stock belong to? And what is the quantity of stock that he has? So all these are reflected in a Demat account. For example, a person may be having 5 stocks of Infosys, 10 stocks of Wipro, 25 stocks of Tata Steel. So all these will be reflected in the Demat account. Okay? And finally, a trading account is required to buy or sell stocks or shares. It is by using a trading account the stocks or shares are bought or sold. Trading account is the one that connects us with the stock exchange. Okay? So without trading account you cannot buy or sell shares. And generally in recent times, these two accounts are opened with a broker. Okay, so we have learnt about broker, correct? We have Zerodha, we have Grow, we have Upstocks, we have Angel One. All these are brokers. So when you open an account with the broker, they will open both Demat account and trading account. Okay. Yes. Now, let us see how a trade happens. Let us assume this is a buyer, this is a seller. Now, the buyer can also be a seller, the seller can also be a buyer. Okay. Let us not take that case now. Let us say this person is a buyer, this person is a seller. In his bank account, it says he has rupees 100. Okay. In his bank account, it says he has rupees 200. So this is what bank account reflects, the amount of money that the person has. Okay. Next, in the Demat account, it reflects how much stocks does this person own. For example, this person owns 5 stocks of Tata Motors and 2 stocks of Infosys. So this is reflected in the Demat account. And in this person's Demat account, it says that he has 13 stocks of Tata Motors and 4 stocks of Wipro. Okay. So the stock details are reflected in the Demat account. Now, let us say that the seller sells 2 stocks of Tata Motors at 5 rupees each to the buyer. So we have a buyer, we have a seller, correct? So the seller has 13 stocks of Tata Motors, buyer has 5 stocks. So this person wants to buy 2 stocks. This person, let us say, want to sell 2 stocks. So this person sells 2 stocks of Tata Motors at rupees 5 each to the buyer. Let us say that the market price is 5 rupees. It is not 5 rupees. I have taken a simple value. Alright? Yes. So he sells 2 stocks at 5 rupees. Now, what happens? After T plus 1 day, we'll see what this is later. Okay. After T plus 1 day, the transaction is completed. Okay. So now the seller has 210 rupees in his account. He had 200 rupees previously. As he has sold 2 stocks worth 5 rupees each, he has 210 rupees now in his bank account. And in buyer's bank account, 90 rupees is there. Okay. Why? Because he has given 10 rupees to seller to buy 2 stocks. Now this is reflected in the bank account and this is reflected in the bank account. Okay. Now what does the Demat account reflect? In buyer's Demat account, it says that he has 7 stocks of Tata Motors. Previously he had 5. So he bought 2 and so now he has 7. And he has 2 stocks of Infosys. In the Demat account of seller, it says he has 11 stocks of Tata Motors because he has sold 2 to the buyer. And he has 4 stocks of Wipro. Okay. Now, this transaction of 2 stocks happens in a trading account. So buyer needs to have a trading account, seller needs to have a trading account, and through the trading account the trade happens or the transaction happens. Through the trading account and through the exchange. Okay. And for it to settle, it takes T plus 1 day, meaning trading day plus 1 extra day. For example, let us say that you made the transaction, you made this transaction on Monday. You made this transaction on Monday. So Monday would be T, trading day, transaction day. Okay. And plus 1 would be Tuesday. So on Tuesday, this would be reflected in your Demat account. Okay. On Monday, it would be like this. On Monday, it would be like this. Only after a day, it would be reflected like this. So it needs 1 day to clear the transaction. Okay, it needs 1 day to clear the transaction. What happens behind, I'll tell you in a few moments. Okay. Now, when we say bank account of buyer reflects 90, it is not actually 90. When I say seller's bank account reflects rupees 210, it is not actually 210. It will be less than that because we need to pay commission to the broker. Okay. So let us say the commission that the broker takes for a transaction is 2 rupees. So for the same transaction, the buyer has to pay 2 rupees and the seller has to pay 2 rupees. Okay. So there is only one transaction happening. The seller is selling 2 stocks of Tata Motors to the buyer. That is the only one transaction that is happening. Even though only one transaction happens, both will have to pay commission to the broker. Okay. So 2 rupees will be taken from the buyer, 2 rupees will be taken from the seller. Okay. So ultimately, this is what will be reflected in the bank account of buyer and seller. Now, why does the brokers take commission? Brokers take commission because they want to make profits too, correct? Theirs is a company too. So they want to make profit because they have invested in infrastructure. People are working for them, correct? At the end of the day, they have to make profits too. And leaving this profit, they have some extra work to do too, which we will see now. And for their extra work, they take commission. So this commission of 2 rupees has the profit that they are making or they want to make for their company, and it is for some extra work they do. Alright, what is it? Let us see now. Now, before seeing the work that the broker does, let me read this out and tell you the function later. We have depositories. Okay, we have depositories. Generally, a country will have only one depository. Okay, what is a depository? We'll see later. Do not worry about it. Depository. A country has one depository, but India has 2 depositories. One is NSDL, National Securities Depository Limited, which is promoted by NSE, and CDSL, Central Depository Services Limited, which is promoted by BSE. And both depositories are controlled by SEBI. Now, let us see the function of the depositories. Okay, let us say that a company, let us say Tata Motors, okay, for example, has 4,000 shares, and out of those 4,000 shares, 2,000 and 1,000 shares are held by the promoters, okay, and 1,000 shares are held by the public. Now, where is the detail of who owns how many shares stored at? For example, A has 2,000 shares, B has 1,000 shares, Anil out of the public has 100 shares, Anita has 100 shares, Ravi has 53 shares, David has 47 shares, Ravi Kumar has 700 shares. This detail is stored at. Where is this detail stored at? This detail is stored in the depository. Okay, so this detail of who owns how many stocks or shares is stored in the depository, and Demat account just reflects the amount of stocks or shares brought through that account. Okay, now you can open multiple Demat accounts with multiple brokers. Okay, and one single Demat account shows you the shares or stocks brought through them. Okay, so multiple Demat accounts will show you multiple varying details according to the stocks that you have brought through them. Whereas in the depository you get the entire details of the stocks or shares a person owns, okay, across all the Demat accounts. Now it is not only shares, it also stores the details of mutual funds or bonds that a person owns. So every single detail like this is stored in the depository. Okay, now we'll proceed further and we'll come back to this later. Now this is how a transaction happens. Okay, so this is buyer, let me name him as Ravi Kumar, and this is a seller, Anil. Okay, so buyer Ravi Kumar wants to buy stocks or shares and Anil wants to sell shares. Alright, now let us say a transaction of 50 shares happen. Okay, the seller sells 50 shares to buyer. Now previously, this is the data that is with the depository. Okay. So who is the seller? Anil. How much does he have? 100. Who is the buyer? Ravi Kumar. How much stocks does he have? 700. So after selling the shares or stocks, Anil has 50 and Ravi Kumar has 750. So basically Ravi Kumar has bought 50 from Anil. So this is the current data. Now this data is updated data. Okay, this is previous data and this is updated data. This will be in depository, but then someone has to give the information to the depository, correct? So saying that there has been a transaction of 50 shares. Who does it? Broker does it. Okay, broker does it, and that is why he takes commission from me. All right. Now let us see how this transaction happens. Buyer orders 50 shares. Seller orders 50 shares. Orders in the sense he keeps an order to sell the shares. This person keeps an order to buy the shares through the broker. And when there is a price match, the NSE stock exchange makes a transaction. Okay, makes a transaction. So this person gets 50 shares and this person loses 50 shares. Now this data or detail of transaction has to be sent from the stock exchange to NSDL or CDSL, and that job or work is being done by broker. Okay, so that is done by broker. So broker sends the detail of transaction to the depository, and so he charges a commission or a fees. Okay, and once it clears, so we have clearing houses, okay, depository participants, which are not required for you right now, but all those work will be done by brokers. Okay, and for this they charge fees, and only when they confirm that the money has gone from the buyer to the seller, and when everything is okay, the shares will be reflected in his Demat account or in their Demat accounts. Okay, so until then they will not be reflected in their Demat accounts, and for this process it takes 1 day, and that is why we say T plus 1 day. Previously it was T plus 2, now it is T plus 1. That means if you buy shares today, then tomorrow it will be reflected in your Demat account, and the time is required for the broker to send the data to NSDL and to confirm that the transaction is successful and it is proper. Okay, for this it takes 1 time, and the data will be updated in the depositories. Okay, so basically Demat accounts reflect how much stocks that you have, and depository is where the actual stocks in electronic form are stored. Okay, now this is required. Why is this required? This is required for the companies. Okay, for example, here we had taken Tata Motors, right? So if Tata Motors want to pay dividend to their shareholders, where will they get the data from? Where will they get the data saying that this person has 50 shares of our company? Someone has some number of shares of our company. Where will they get the data from? They will get the data from depositories. Okay, so this data will be given to the companies by the depositories. when they want it. Alright? Just remember that it is in depositories that your stocks are stored in electronic form, and Demat account just reflects it. Okay? In Demat account, we do not store anything, or nothing is stored. It just tells you how many stocks that you have brought through them. The entire amount of stocks or shares that you have brought will be stored, all the details will be stored in the depository in an electronic form. Okay? Previously we had share certificate, something called as share certificate. Now we do not have that. Everything is electronic and everything is stored in the depository. Okay? And as mentioned, the depositories will have all the data regarding a person. For example, Anil may have 50 shares of Tata Motors, 100 shares of Infosys, 200 shares of some other company. All these data will be in the depository. Okay? So the depository will generally send you statements, okay, every month or every quarter, saying that these are the things that you own, these are the stocks that you have, these are the mutual fund or bonds that you have. Okay? So this is what the depository does. It makes sure that the transactions are safe and no one is cheated. Okay? Yeah. So I hope this video was useful to you. I've covered a few basic terminologies. In the series, as we proceed further, we will learn few more. Alright? So I'll see you in the next video. Till then, take care and thank you for watching.